Everyone is asking, how will the US pay off $37 trillion in debt? The answer is simple. They won't. They are not going to pay it back in dollars that are worth what they are today. That is mathematically impossible. The interest payments alone are now exceeding the defense budget. The debt-to-GDP ratio is screaming at levels we haven't seen since World War II. Instead, they are quietly preparing to revalue the collateral backing the dollar. They are building a lifeboat. One side of the boat is made of gold, the other side is made of Bitcoin. I have spent the last 48 hours auditing the Federal Register, the Basel III banking accords, and the latest Senate bills to find the 25 distinct signals that the Great Erasure has already begun. Signal number 4 is a little-known accounting line item at the Federal Reserve that hasn't changed since 1973, until now. Signal number 18 is a new law in Texas that hints at a sovereign Bitcoin standard. This is the macro edit. Before we get to the list, you need to understand the mechanism. In 1934, President Roosevelt confiscated gold and then revalued it from $20 to $35 an ounce. Overnight, the government's profit on that gold allowed them to print money to fight the Depression. In 2025, they don't need to confiscate it. They just need to mark it to market. The US government owns 261 million ounces of gold, and after recent seizures and policy shifts, over 200,000 Bitcoin. Right now, these assets are valued at historical cost or zero on the balance sheet. If they simply change the accounting price to market value, they create trillions of dollars in equity out of thin air. This isn't just accounting magic. It is the only escape from fiscal dominance. Fiscal dominance happens when the interest on the national debt becomes so high that the government must print money to pay it. This causes inflation, which drives interest rates higher, creating a doom loop. The only way to break the loop is to change the value of the collateral backing the system. This is how you delete debt without defaulting. Here are the 25 signals that prove the accounting team is already in the room. Part 1, the digital reset. Signal number 1, the Bitcoin Act, introduced by Senator Cynthia Lummis, the Bitcoin Act of 2025. Senate Bill 954 is the smoking gun. It explicitly directs the U.S. Treasury to purchase 1 million Bitcoin over 5 years. Crucially, the bill mandates holding this Bitcoin for 20 years. You don't hold a speculative asset for 20 years. You hold a reserve asset. It proposes funding this purchase by revaluing the Federal Reserve's gold certificates, connecting the digital future directly to the analog past. Think about the game theory implication here. If the United States locks up 5% of the global supply of Bitcoin, the scarcity shock will be absolute. Other nations will realize there isn't enough left for them. It triggers a global sovereign accumulation race where the first mover secures their future and the last mover is left holding worthless fiat paper. Signal number 2, the Strategic Bitcoin Reserve Executive Order. Discussions around a strategic Bitcoin reserve have moved from fringe theory to serious policy debate. While a specific signed executive order from March 2025 is hypothetical in this narrative, the political momentum is real. President Donald Trump has publicly advocated for keeping all Bitcoin currently held or acquired by the U.S. government, effectively creating a strategic stockpile. This shift from sell to hold is the first step in monetization. Signal number 3, the Pennsylvania sovereign legislation. It's not just Washington. Pennsylvania introduced the Bitcoin Strategic Reserve Act, House Bill 2664, to allow the state treasury to hold up to 10% of its funds in Bitcoin. Why? Because states cannot print money. They need collateral that outpaces inflation. Pennsylvania is front-running the Federal Reserve. They see the debasement coming and are opting out of the dollar-denominated suicide pact. Signal number 4, the Texas Digital Fort Knox. Texas has gone further. The legislature passed Senate Bill 21, creating the Texas Strategic Bitcoin Reserve, a fund outside the state treasury managed by the comptroller. When the second largest state economy builds a crypto vault, they are preparing for a world where federal dollars aren't enough. Texas is positioning itself as a sovereign economic zone, insulated from the fallout of a federal default. Signal number 5, the Wisconsin pension buy. The State of Wisconsin Investment Board disclosed a $160 million position in Bitcoin ETFs. This is a pension fund. They are conservative by nature. When they buy Bitcoin, it's not for alpha, it's for liability matching. They know they have promises to keep in 2040, and the dollar won't have the purchasing power to keep them. Signal number 6, the 2050 projection. VanEck released a model showing that if Bitcoin becomes a global reserve asset, it could reach $3 million per coin by 2050. At that price, a U.S. stockpile of 1 million coins would be worth $3 trillion. That essentially erases 10% of the national debt simply by holding a digital key. This is the infinite money glitch for the Treasury. Signal number 7, the Wyoming Stable Token Act. Wyoming is effectively building a state central bank that can operate independently of the Federal Reserve if the dollar cracks. They are launching a state-issued stablecoin backed by treasuries, creating a new form of public money that is auditable, transparent, and sovereign to the state. Signal number 8, the seizure halt. For years, the U.S. Marshals sold Silk Road Bitcoin for pennies. In 2024 and 2025, those sales stopped cold. The wallets are dormant. The U.S. government is now the largest whale in the world. They are not selling because they are waiting to reprice it. They realized they were selling the life rafts to buy deck chairs on the Titanic. Signal number 9, BlackRock's sovereign clients. Larry Fink admitted that sovereign wealth funds are buying Bitcoin ETFs. If foreign nations are backing their currencies with Bitcoin, the U.S. is forced to do the same to defend the dollar's hegemony. Game theory dictates that the first mover wins, but the last mover dies. The U.S. cannot afford to be last. Signal number 10, the debt-to-Bitcoin swap theory. Strategists believe the U.S. could issue Bitcoin bonds, debt backed by the future value of their holdings. This allows them to borrow at lower rates, bypassing the bond vigilantes. This isn't sci-fi. France did exactly this in 1952 with the Pinet bond. When the franc collapsed, they issued bonds pegged to the price of the gold Napoleon coin. It was the only way they could get the public to trust them again. The U.S. will eventually have to issue the Bitcoin bond to restore trust in the Treasury. Part 2, the analog reset. We just covered the digital side of the ledger, but the analog reset, the gold signal, is where the banking cartel is actually hiding their equity. Most people miss this because they are too focused on the crypto headlines. I break down these banking updates every week. If you want the full picture, both digital and analog, make sure you are subscribed so you don't get half the story. Now, let's look at the $42 gold secret. Signal number 11, the gold certificate secret. Open the Fed's balance sheet. You will see a line item for gold certificates. It is valued at roughly $11 billion. Why so low? Because the U.S. legally values its gold at $42.22 per ounce, a price set in 1973. The market price is nearly 100 times higher. This is the hidden equity. This isn't a conspiracy theory. This is statutory law. The government has deliberately kept this price artificially low for 50 years to mask the true inflation of the currency. It is a coiled spring waiting to be released. Signal number 12. The revaluation account mechanism. The Federal Reserve's accounting manual explicitly allows for a gold revaluation account. This is not a theoretical mechanism. It is line item 8 on the Fed's weekly H.4.1 release. It is currently empty, but the infrastructure is built. If the Treasury Secretary simply signs a piece of paper revaluing gold to market price, the Fed's equity instantly jumps by $600 billion. This is the nuclear option for the Fed's insolvency. Signal number 13, Basel III Tier 1 reclassification. As of recently, gold is now classified as a Tier 1 risk-free asset under Basel III regulations. It is now mathematically equivalent to cash and treasuries on a bank balance sheet. This incentivizes banks to hoard gold because it counts fully towards their capital requirements. The banks were told to get ready before the public even knew what was happening. Signal number 14, Utah's transactional gold. Utah passed laws allowing state vendors to be paid in gold and silver. This is a parallel operating system. If the banking system fails, Utah can legally continue commerce. Signal number 15, the central bank buying spree. Central banks bought over 1,000 tons of gold in back-to-back years. They are not buying it for jewelry. They are buying it to prepare for a reset. They are swapping fiat promises for hard atoms. This is a vote of no confidence in the U.S. Treasury market. They know the default is coming. Signal number 16, the paper versus physical break. We saw the Shanghai gold price trade at a premium to New York. The East is draining the West's gold. The U.S. will eventually be forced to lock down its own gold exports or reprice it. Thus, signal number 17, the Missouri Constitutional Money Act. Missouri is pushing to eliminate capital gains tax on gold. If you don't pay tax on the appreciation, it functions as money. This is the de facto remonetization of gold at the state level. Signal number 18, the JPM hoard. JP Morgan holds the largest stockpile of physical silver and massive gold positions. Watch what they do, not what they say. The house always wins, and the house is betting on metal. Signal number 19, the debt ceiling loophole. The trillion-dollar platinum coin theory relies on seigniorage. The government can assign an arbitrary value to a metal token. A gold revaluation is just the adult version of this coin. Signal number 20, the Russian unit proposal. Russia and the BRICS nations are proposing a trade unit backed 40% by gold. To compete, the U.S. would have to back the dollar with its own gold reserves. You cannot fight a gold-backed currency with a debt-backed currency. Part 3, the endgame finally. The endgame. This is how the switch is flipped. Signal number 21, the interest expense spiral. The U.S. is now paying nearly $1 trillion a year just in interest. This exceeds the entire defense budget. You cannot tax your way out of this. You must inflate or revalue. The math has gone vertical. When the interest bill consumes 100% of tax receipts, the currency dies. We are approaching that event horizon. Signal number 22, the financial repression playbook. History shows the only way to lower debt to GDP is to keep interest rates below inflation. They have done this before. In the 1970s, it was called Regulation Q. The federal government passed a law that made it illegal for banks to pay you more than 5.25% interest, even when inflation was running at 12%. They legally forced you to lose 7% of your wealth every single year to pay down their debt. A CBDC with negative interest rates is just Regulation Q with better software. Buying Bitcoin and gold acts as a pressure release valve. It absorbs liquidity so it doesn't flow into milk and bread, but flows into assets. Signal number 23. The 2026 Reset Summit. There are rumors of a Bretton Woods III in 2026. The topic? Harmonizing digital asset regulations. In reality, it will be the treaty where major nations agree to peg their currencies to a basket of hard assets. Signal number 24. The infinite bid. If the U.S. makes Bitcoin a strategic reserve, they become a price-insensitive buyer. They will buy the dip forever. If the U.S. government is the floor, there is no floor. They can print infinite fiat to buy finite Bitcoin, pushing the price to infinity against the dollar. Signal number 25, the price target implication, to offset $37 trillion. Gold needs to be priced at roughly $50,000 an ounce, and Bitcoin needs to be $1 million plus. Let's run the numbers. The M2 money supply is roughly 21 trillion. To back just 20% of that with gold, gold needs to be $25,000. To back it with Bitcoin, Bitcoin needs to be $2 million. The math dictates the price. This sounds crazy, but in 1933, $35 gold sounded crazy. The debt is the variable that forces the price. The action plan. So, what happens when the U.S. government decides to erase its debt by repricing your money? Step 1. You front-run the trade. You buy what the central bank is going to buy before they officially announce the price change. You buy the insurance before the house is on fire. Step 2. You ignore the doom. They won't default. They will debase. They will pay every bondholder back. but those dollars will be backed by nothing. Do not bet on the end of the world. Bet on the end of the current monetary system. Step 3. You watch signal number 1. Keep your eyes on the strategic reserve legislation. The moment that bill passes committee, the game is live. The legislation is moving. The switch will be flipped, and I'm tracking it in real time. Consider this your final invitation to the other side of the trade. We are building the lifeboat here. Seats are limited. Subscribe, align to beat the buzzer. I'll see you in the next edit.